What are some of the challenges that you have for somebody who's thinking student housing? Every niche has its own, plus points and negative points. So tell us about the pros and cons of this niche.
College kids, a lot of my renters are first time renters. And so they're just gonna make mistakes. They're gonna do silly things.
You need to understand how to negotiate either way when you're buying or when you're selling.
Whatever it was, $10,000 in imaginary money. And I think that was my very first taste of, wow, you can use money to make money.
You're doing a lot of different things. So you're a coach, you're a real estate investor, you're doing stocks. What does next 5 years look like for you? Hello and welcome to another episode of Bigger Life Podcast. Today's guest is awesome. We have Ryan from Nebraska. He is track and cross country coach with Hastings College in Nebraska. Also a stock and options investor alongside with student housing. Welcome, Ryan. How are you doing today?
Excellent. Thanks for having me. Excited to be here.
Great. So let's talk about your coach with college. So that experience and how does that kind of help you with the student housing? I mean, those are two different things, but yet related, I think.
Yeah. I got my start as a high school teacher and coach. 12 years ago, I had the opportunity to move from Lincoln, Nebraska to Hastings and be a college coach. And I had done a little bit of house hacking before, renting rooms out to roommates. And, I was right out of college. So you just live in that college lifestyle still, but, getting others to make your mortgage payment for you. And after being here a while, talking to some of my college athletes that were living off campus, I started asking, hey, what are you paying for rent? And I kind of saw where they were living, saw the poor landlords and the the poor conditions of their housing. I was like, I can do a better job of this. So started reading the books, started listening to the BiggerPockets podcasts and learning a little bit. And then in May of 2018, I bought a duplex. It was 2-1 on either side. I've since converted it into 3 bedrooms, 2 baths on one side, still one on the other. Just the floor plans are different, and rented by the room. I think I took advantage of, kind of I guess I'm going to say it again. My advantage is I'm around college kids all the time. I've got the connections with my athletes. I've got the connections with other coaches. And I always knew I'd see the group emails come out like, does anyone know where, I can put a new recruit, a JUCO transfer, or something like that. So it's worked out really well for me. I really enjoy it. Usually 9-month, 10-month leases. Sometimes they'll re-up for a year. So I can charge more as it's per the room. The benefit sometimes is the houses clear out in the summer. I can go in, kind of clean them up a little bit, do any repairs and updates. But I really enjoy it. College kids are fun. There's certainly challenges with it, but I think they're fun to rent too.
Yeah, great. And what are some of the challenges that you have for somebody who's thinking student housing? Because that's the unique niche in itself, where on one hand you got these leases which are kind of secure because college students are going to be there for that duration of 4 years. But it has its every niche has its own plus points and negative points. So tell us about the pros and cons of this niche.
Yeah, I think the pros are, yes, you are secure. Those kids are, usually financially pretty stable with their parents, or work. You've got the connections. I'm generally renting to athletes because that's who my connection is. So that's another draw that's going to keep them in school. They tend to be good students. I think a drawback, one, it's a lot of short-term leases. It's a lot of 9, 10-month leases because, they come in August. They want to be gone in May. But again, you can make the rent work out where you're making the same as 12, but you're gonna have a lot of turnover. College kids, a lot of my renters are first time renters. And so they're just gonna make mistakes. They're gonna do silly things. I remember my tenants pay all their own utilities. But I remember one time I had, early on renting, I had one of the young ladies reach out to me and she's like, hey, my utility bill is really, really high. It's like almost $400. And I was like, I have a bigger house. I'm running my AC. Mine was only 250 last month. What are you guys doing? Well, I drove by their house and I think their AC was set to 60 and like half their windows were open. And it's like, okay, let's not do that. Where a kid, they freeze up the AC because it's like it randomly gets hot one day, being in the Midwest where the temperatures fluctuate. And we want it to cool off quickly. Well, let's turn it down to 50. And not knowing that, hey, it's not going to cool off faster. You're just going to overwork the air conditioner by doing that. Little things like, oh, hey, Ryan, I was going to call you, but for the last month, the faucet's been leaking. Like, oh, no, call me right away on those things. So they're just, I think, unaware. I haven't had too many problems with, I think the stereotype of college kids, like big wild parties and they're trashing the place. We're a pretty prestigious academic institution. Again, a lot of mine are athletes, so they know that, we can't get in too much trouble or the coaches are going to get on our case. A lot of them are my athletes. But it's just little silly things they don't know. And I've had once or twice where I've had a kid, big stars in their eye, I'm going to do this, I'm going to do this. And hey, I don't know if I can afford this. I don't know if I want to live off campus. And I think I've been renting since 18. I think there's only been one kid I ended up just letting out of a lease. The young lady was just overwhelmed. And yes, could I have pursued it, done this? I just, I was like, you know what? It's fine. Ended up getting someone else to rent it. I was okay. The other option was in 2020, I ended up letting everyone out of their lease starting April 1. And yes, was that a financial impact on me? Yes, their leases were running through May. It was really only 2 months, but at that point, I just felt ethically, morally, I wanted to allow these kids to go home. So, but yeah, other than that, no, it's been great. I haven't had too many problems, but yeah, it's silly things. They haven't rented. They don't know how to change light bulbs. They don't know how to do a lot of stuff. So, you have to just kind of help them along the way.
Yeah, I think the rents kind of pay for that, right? So if you are changing and doing those minor things, and the rent is offsetting that cost.
It is, yeah, it is.
So you started May of 2018 and you bought a duplex, and right now we're in 2025. So what's your journey looking so far?
Yeah, so I ended up in April of 2020. I'm looking at my notes here. April of 2020, I bought a 2-bedroom, 1-bath house that is actually sitting on a street the college owns, like in the middle of campus. I went in, that was during COVID, stuff was shut down. So it was like something for me to do was go over there all the time and work on this house. I converted it into a 4-2, went in, kind of finished the basement, put in two more bedrooms down there, added a bathroom. Contractors did the bathroom, put that in for me. And that was a great rental for me. And a perk is I knew the college had long-term building plans there. So it was my most popular rental because it was like right in the middle of campus. But in May of 2024, I sold that house for about a $95,000 profit. And so I ended up
To the college?
to the college. Yep.
That's what I
And
figured.
it was kind of funny because I get called in to like talk to like some of my higher up bosses. And I went into the meeting and I go, understand, I'm coming in here not as Ryan the employee. I'm coming in as Ryan the business owner. So we're going to have a little different interaction here. And they were good about it. And so they made me an initial offer. I told them politely that it was ridiculously low. And that, yes, I think the purchase price on the house was 85,000. It was old. I probably put $30,000 of work into it. But I said, hey, with the rent I'm making with this, I got it at, an interest rate of like 2.5% or something just ridiculous. I said, you have to understand, I've got to not only buy another house, I've got to go in and do the work. That's my time, effort, and money. I've got to get a loan that it's not 2.5% anymore in 2024. This is what it's worth to me. And so I ended up selling it for $195,000 to the college. And then I took that money, I paid off the duplex I bought in 2018. And I ended up buying another house this last summer. Oh, I forgot. I bought a single family home. I don't have it in my notes here. I think I bought that in 2021. And I actually rent that to my brother here in town. So
Nice. That's the thing, right? you need to understand how to negotiate either way when you're buying or when you're selling, because you were able to negotiate the deal, even though in a sense you're discussing or negotiating the deal with the same college who employs you, but you were like, hey, it's not me at this time, it's not the your hire, but it's the investor, it's the business owner, and I'm going to speak for myself and not let that pressure kind of get into you where you were lowballed and you did not cave into that. So speaking for yourself.
Yeah, and I think it could make for an awkward situation. But I think the fact I just came in right away and stated what you said, so we kind of knew, hey,
Mhm.
we're on different footing here than maybe we normally are
Absolutely.
in the
And that's
situation.
very important. So, and that's the key thing. You need to understand your numbers. You need to understand at any given point of time, whether you're buying, you're selling, you're contracting, whatever you're doing, what your numbers are and how it's going to impact your bottom line. And you should be making decisions and calls based on that and not fall into any kind of a pressure, whatever that it could be.
Yeah, yeah, and I think obviously, as you mentioned, in that situation, selling, but I think, purchasing as well, because I think sometimes we get excited. It's fun to buy a property. We see, hey, if everything works out perfectly, I can make money. But I always try to look at it as, okay, what if I'm only able to rent out half to three quarters of the rooms? What if I'm only able to get 9-month leases? So I try to build in large vacancies. What if, hey, I've done this before, I've replaced flooring, I think it's going to cost about $2,500. What if we run into something that costs me twice as much? So I try to be pretty conservative when I'm running my numbers for buying. Kind of what if everything reasonably goes wrong? Not what if the house burns down, but what if kind of everything else, it's a little iffy, I've only got it half full. And if I can do that, it's like, hey, I still at least break even or make a little bit of money, and not just paying the mortgage, but paying insurance, upkeep, uh, you know, capital improvements, and those kind of things. Then it's like, okay, then I know, hey, if I have it three quarters full, I'm cash flowing. If I have it completely full, I'm cash flowing really well. So I always try to set it up a situation where I built in extra vacancy and those kind of things. I factor in 2 months of vacancies at least in all my rentals because I do rent to students. But a lot of times I get kids that want to stick around for a summer and just want something short term. And so I might be like, hey, I've got the north side of the duplex open. Yeah, if you and your friend want it for 2 months, I'll give it to you for 2 months, but it's going to cost this much. And that's all just bonus cash flow for me because I'm factoring those vacancies in. So yeah, I think it is important because I know when I first started looking in late 2017, early 2018, I was looking at just these horrible houses. And because I was thinking, wow, if I could buy a property for $50,000 and rent it for this, and then as you started thinking, I think the furnace is going to go out. The roof needs replaced. This driveway is just completely destroyed. It's going to need to, and you start thinking, okay, the amount of repairs I'm going to have to do, not only immediately, but over the next 5 years is going to be astronomical. How much can I get for rent? Because this place is gross. Unless I go in and completely rehab it. And so I started, thinking it's like, oh yeah, I didn't think about what if it's vacant? What about these things? And so when I started, I guess, researching more and being a little bit more mindful, I think that helped me avoid some big mistakes where I think sometimes cash flow is really, really enticing, but it's like, that comes with a trade-off.
Yeah, it's a balance that you have to look at, and of course, knowing your numbers as you rightly mentioned. And what if this goes wrong, and what if this happens? You just don't know what you don't know. So projecting for those things can still go south of that. But if you have done enough analysis to say, you have already factored in those things, you are covered to a degree.
Yeah.
Yeah. So awesome. Awesome. Great journey. Then I know that you're also a stock and options investor. So
Yeah.
talk to us about that.
Yeah.
I'm
So
excited to hear.
yeah, I've been investing in the market for a long time. I mean, it relates all the way back to high school economics class. We did, the little project where you get whatever it was, $10,000 in imaginary money and invest it. And it's kind of like I think that was my very first taste of wow, you can use money to make money, and like I can be an ownership in in Ford Motor Company, or at the time in the 90s, America Online. Like, wow, they probably don't want to own America Online now, but you could look at those things and that was exciting. And so I started investing right away when I got employed. I currently here at work, because we're an educational institution, instead of a 401k, we have a 403b, basically the same thing. So I, of course, take the full match in that. And then I dump a bunch of money into a kind of max out I have a 403b Roth. So I put in there, and then I have a good old Robinhood account on my phone. That's kind of my private brokerage. I do a lot of index funds. So, track the whole market, the S&P 500. I do a little bit of your sector spiders, your 12 sectors of the market. And I got into a few years ago, someone taught me how to buy and sell options. And like a lot of people that learned options right away, it's like, wow, I can put, for whatever stock, I can buy these options that if it hits this price in 3 months, it's way above its current price. I'll buy those for a penny. And if it hits that, I'll make a lot of money. Well, those never hit, unless you're just freakishly lucky. And so I started looking into selling options, because I think the research shows somewhere around 90% of options expire worthless. And so, hey, instead of that guy that's trying to buy lottery tickets with options, why don't I be the guy that's selling the lottery tickets and guaranteeing the money? So I will sell covered call options, which means, an example I give, I have like 1,000 shares of Ford. And so options are sold in blocks of 100. So I will say, hey, Ford right now is trading at somewhere around $9.50 a share. So I'm going to sell an option to expire in a month for covered call options, meaning I have the shares, for $11. And I might make, I don't know, 7 cents a share on that. So I may end up making, just a little bit of money here and there. And I set it at a price where, hey, if I do sell those shares at $11, that's a good profit for me. So I'm okay with it. It's not a gamble, but more often than not, it expires under that $11. So I keep the sale price of that option and don't have to give up my shares. And so I'll do that with other funds, but I always make sure I set those prices at something that I'm comfortable selling anyway, or I will sell put options, and that means to buy. So if I want to buy 100 shares of VOO, I will set it at a price. Hey, if it's this low, I'll set it lower than the current price. If it's this low, I will buy that. I'm obligated to buy that. And if it hits that price, I'm totally fine buying at that price. It's a great price. But I keep that sales price because 95% of the time, that stock doesn't hit that low price, and I just make a little bit of money. So I do that here and there. I probably make anywhere from $200 to $1,000 a month selling options. Now, the time, you have to be careful. The time it can bite you is during the COVID crash, when the market, March of 2020, when the market just started plummeting. I had these, your covered call options were fine because I wasn't going to sell any stocks because the price was dropping. I was okay on those. But those put options, prices sunk. If I had an option I'm going to buy stock XYZ at 100, but that the price went all the way down to 70, I still got to buy it at 100. So I ended up, you got to make sure you have enough money to float that until the market comes back. So again, I buy and hold. It was fine. I held on to some of those. They're mostly sector spiders. So I'm assuming the US economy isn't going to collapse for a decade. Yeah, you have to be aware of that because you can get margin called, where, if you're buying on margin and those kind of things, where you're taking out money, and it's not like a credit card where you pay a minimum payment. It's by the end of the day.
So how do you make money on the put option if, let's say, right now a stock is trading at $10? I'm just making it a fictitious stock, right? It's at $10. You pay, and you are like, okay, I'm gonna put option for $8,
Mm-hmm.
and you have to pay something for that option, right?
Because I'm doing what's called selling a put option. So basically, I am, how to put this, I am selling some other options trader insurance that I will pay them at least $8 a share. So if the market collapses, they're going to get at least $8 a share. And I'm because I'm doing that, I'm selling it. They have to pay me for that. And so I might say I make $13 an option contract. I sell 10 contracts. I make $130. If at the end of that option period, whatever it is, it could be a week, could be a month, could be a year, at the end of that options contract, if that stock price isn't below $8, I just keep that money. That's, if you were on the other side of that options contract, that's the insurance you paid that, hey, just in case the economy collapses, I will make at least $8 on this. Now, if it does collapse and I buy for $8, I have to have that money. So I either have to have that cash in the account, or I have to buy it on margin, where basically I am borrowing against the balance of my account. And so you just have to be smart. There's nothing wrong with buying on option. It's kind of, buying real estate with a mortgage. You're leveraging your money. But again, don't over leverage yourself. Don't over margin myself. I never want to be at a point where, hey, if I have to buy this, I don't have the cash to cover this. So you just have to be smart about it.
So let me phrase it again, right? So you got two styles of options that you're dealing with. One is you are selling options, which are covered options. And you got a bundle of, let's say, 1,000 stocks that you already own anyways. Mm-hmm. And then you're saying, right now, let's say the stock price is $10, and you're selling it to somebody to say, if it goes 12, you'll sell it. And they pay you maybe 10 cents or 20 cents per bundle. And a bundle is a minimum of 100 stocks in it. Mm-hmm. Okay.
Yeah.
If it goes to 12 within that month, then you have to sell those. And
yes.
You're fine because you're okay to sell it at that price point. You're okay to take profit. Let's put it this way.
Yeah. And like I said, 9 out of 10 times, you're going to keep your shares and take the profit. Now, that 1 out of 10 times, sometimes it does, and it might be, hey, it's at the end of the contract, it's at $12.15. Okay, I gave up 15 cents. It's still a good profit for me, and I made the money. Now, if it's a situation where for some reason that stock went to 1,000, you sold it for 12, that's disappointing. I haven't had that happen.
Yeah, it sounds like this is very similar to, like, I have limited, knowledge about stocks or how the whole thing operates. But what I do is when I'm buying stocks, I say, what is it called, a buy order, right? I say, I want to buy the stock at this price point. Mm-hmm. But rather, I think it's a better way of doing it with option, because now somebody else is paying you if it gets to that price point. And similarly, what I'm doing is I'm selling it at sometimes I have this order, I'm saying limit order or whatever it's called. I'm saying if it gets to this price point, sell XYZ stocks, right? But you're saying pay me, and I'm going to sell you the stock at this price point. So you're actually dipping on it.
Yeah, it's now there are some caveats to it. It's the length of the contract. So if it expires in a month, that share could go above and drop back below. Or now they could call the option. Most of the time it doesn't. It'll run the length of the contract. So there are, and you have to do it in larger chunks. And you can't just do it. Like I couldn't sell, hey, I want to put VOOs trading for $250. I want to sell it for $2. No one's going to buy that contract because it's not going to happen. So you are a little limited, but no, I agree. When I buy, I try to buy in chunks, unless it's something I'm just slowly adding to. I try to buy in chunks of 100, so then I can use the option method, and it just usually it works out. I come out ahead. I'm not a pro by any means, but I've learned a decent amount over the last few years. And again, I don't make enough off of it to live, but I make enough. It's another income stream each month for me.
Sure. Now, how did it go? Like recently, we just had a downfall in the stock market with the print market and things like that. So It was, I think, last month, right?
Yeah.
How did it go for you with that market scenario? Because it's always good with the good scenarios, right? Let's talk about this crash.
Yeah. So when the tariffs were kind of the most scary coming out, I think it was after the politics aside, it was after the Donald Trump press conference with the big poster board showing that every country was paying these tariffs. I had some options out there, and it was like, oh no, I'm going to get hit buying all these now. Again, I could afford it because I was smart, but it was like, okay, I'm going to have to kind of move some money around and do some things. But because it kind of happened earlier in the middle of some of my contracts, the stock market, the prices came back up, and I ended all my put options that were during the worst part of the tariffs expired out of the money. And so I didn't have to buy anything and collected the money. But yeah, because it's just where it happened. I didn't have any contracts expiring the week it was the worst. And so I wasn't forced to buy anything. And if I did, if those contracts would have expired and I would have bought some of those stocks at a low price, they ended up rebounding later. I could have turned right around and sold them or kept them and added to my portfolio.
You mentioned about expiration date. So is it the price within that contract period, anytime that it hits the price within that period, or the price on that particular date?
Both. So what I mean by that is if it's at the end of the contract, then it becomes automatic. However, you can execute a contract in the middle. It doesn't happen very often. But sometimes if it's seen and people think, oh, there could be a turnaround one way or the other, they can execute the contract and then you're forced to buy. But that's really rare. More often than not, people will wait until the expiration period of the contract, which, as somebody that sells option contracts, works to my advantage. But like I said, in the last situation, if I would have got hit in the middle of those contracts and had to buy some of the put options I had out there, the stocks rebounded anyway. So I would have came ahead in that situation as well. Now, you have to be careful. You don't want to sell put options on stocks that are on a continual downward trend, because you don't want to get stuck buying something that's continuing to drop. So I saw a lot of index funds and those kind of things that, you don't want to speculate too much and get into where you're trying to catch a falling knife. You want to stick with things that are pretty surefire.
Sure. And you're doing these options with index funds, not with individual stocks.
I do sometimes, but the few, I don't own a lot of individual stocks. The ones I own are big blue chip companies, that a Ford Motor Company, a Wells Fargo, Berkshire Hathaway. These companies I know aren't gonna, go bankrupt. And I know, like, the automotive people are like, oh, Ford, the automotive, it just, if you kind of buy and hold and know kind of when to do it, you can pick up some trends in the market with some of those. I think they're pretty safe, but I don't speculate very much in the market.
So what's ahead for Ryan? So you're here, you're doing a lot of different things. So you're a coach, you're a real estate investor, you're doing stocks. What does next 5 years look like for you?
Yeah, I think I'd probably like to get a couple more rentals. I'm not somebody that wants to have 100 doors and do all that. I'd like to get, maybe somewhere in the 6 to 10 doors, and work on paying them off, where I owe them free and clear. Really outside of my personal mortgage payment, I don't have any other debt. I'm nearing my net worth has increased a lot in the last 5 years. I'm nearing the point of I could probably do like thin FI if I wanted to. I enjoy my job. It's fun. I get to work with college kids and I get to travel a lot. But I have cut back. I took a little bit of a pay cut last year, kind of changed positions where I was the head coach at cross country and the head coach at track. I'm now the director of cross country and track. And one of my other coaches is now the head coach of track. I was able to kind of get rid of some of the workload, the things that maybe I don't enjoy as much. So I think just cutting back, keeping the parts of my job I really enjoy, and getting to a point where I'm 100% FI and I'm working because I just enjoy it.
Awesome. And if somebody who's listening to the show, they would like to connect with you, what's the best way to get hold of you?
Yeah, a couple ways. I'm on BiggerPockets. They can find me under Ryan Mahoney on there. My email, if you search Hastings College and look under the staff directory or look under track and cross country, you'll see my school email, which is totally fine to contact me on. It's just rmahoney@hastings.edu. Feel free to shoot me an email. I am on Facebook. I don't use it a lot. I use it like a lot of us do. It's like, it's your little way to log into other services. So, because I'll get people like, oh, I saw you were on Facebook. Like, no, it was just running in the background somewhere. But no, I would say email or reach out on BiggerPockets is probably the best way to find me.
Well, thank you. Thank you so much for joining. This was very inspirational, especially what you're doing with the student housing and the stock side of the things.
Yeah, thanks. It was fun to be here. It's always fun to talk about investing.
Well, thank you all. Thanks for joining for today's episode of Bigger Life Podcast. We'll be back next week with another episode with more insights. See you.